Hey there, in this video we're going to talk about how mortgage rates and fees work together. You need to know both to have the full picture. So I want to teach you how to do this, and the best place that I can think of is actually to go to my website, lowlowerlowest.us. And that's what we've got right here. If you go to lowlowerlowest.us, you immediately come to our instant rate quote widget where you can put in information for your scenario. So I'm just going to leave it kind of what we have here. Purchase a single family home. It's going to be a primary residence. Purchase price of $500,000, loan amount of $400,000. Okay. We're going to put 20% down. So this LTV means loan to value. Our loan is 80% of the value. It's going to be in Denton, but you can change, all of these. Credit score 760. So kind of a plain Jane kind of a scenario, and then we click rates. Okay, so it works on it for a minute, and then it gives us some options. We've got a 30-year option, 15-year, FHA, but let's look at this 30-year option. You'll notice right away that there's more than one interest rate available. It's a common conception that each lender has one rate. What rate are they offering? Kind of a thing. But actually, more than one rate is available every day. So, and that's what we've got going here. Now, what you will immediately think is, okay, 4.875, that's the best rate, that's the one I want. Well, I need to draw your attention over here to the fees that are involved, okay? Now, these fees represent the lending costs. So the fees specifically from the place that's providing the money, just their fees is what this column represents. There are other fees, we call them third-party fees. They're fees that are associated with buying a house, but not necessarily associated with getting a mortgage loan. For instance, there are title fees. If you buy a house with cash, you're still going to pay title fees. There might be a survey, there might be an appraisal, there's going to be homeowners insurance, property taxes, some things like that. Those are different from the actual cost of getting a mortgage loan. So for today, we're talking about the fees of just what's involved in getting a mortgage loan. Okay, so that's what we've got right here. Let's choose an option. I'm going to pick this one with the somewhat lower fee here, 5.25. So if we look at 5.25, we also want to look at this fee and what the lender fees are. I also want to explain that lender fees can be named different things. So like if we click view here, it gives us a little more detail. On our scenario, we have what we call an underwriting fee, which you can see right here. And then there's actually a lender credit with this one. It's a credit from the underwriter that offsets this underwriting fee, and here's our bottom line. Well, you may see quotes from other places that have additional fees. They might have a processing fee, an administration fee, an origination fee. They might have an admin fee or a doc prep fee. All of those fees that come specifically from the lender should be grouped all together here as fees, lending fees, right? So we don't have them broken out into all of those different names, but we do have one, an underwriting fee. So one other fee that shows up is what you probably heard about before are points. So points are a percentage of the loan amount, okay? And they can be a positive percentage, meaning it's an additional charge to you to get that rate, or they might show up as a credit. So right here, it's showing up as a credit. So another name for this would be points, kind of points credit. But we typically just call it a lender credit, okay? So 5.25 has fees of $539 for our scenario today. Well, if we wanted to get a little better rate, let's say we wanted to go all the way down to 4.875. Well, we can see the fees go up because we have our underwriting fee, and then we also have points, some additional lender cost to be able to get that rate. So our total ends up being the $5,055. Okay, so one good way to think about this is today's price. Your price to get that interest rate. Okay, and it goes the other way as well. Do you see these negative numbers? If we wanted to raise the rate a little bit, we could get a credit from the underwriter. So you'll see the underwriting fee is the same, but the lender credit has gone up. Our bottom line is we could have $3,937 from the underwriter that could pay other items. So it helps us, if we need it, to bring in less cash to closing. Okay, so I just wanted to point out that when you compare lenders and their rates, you also want to know what fees are involved. Maybe you're getting a quote for 5.25, but the fees are more like $4,500. And then another place would be 5.25 and the fees would be $539. So it's just important to realize and know that there are differences, and you need to know both of those together. Hey, if you have any questions about this, I would be happy to be a resource as you're sorting out what you're looking at and what your goals are and things. If you have any questions, just shoot me an email or give me a call. I'd be happy to help. Thanks a lot.